Okay, so if you want to get started with stock market investing, first thing you have to do is choose which app you want to start investing in, okay? Now, I have always used Robinhood because they have lots of cool features on there, but with what's been happening recently with them, I would probably pick a different company. Now, some good ones I would recommend would be Fidelity. I think they're one of the best. I would also use SoFi, and I would also use Cash App, okay? So those three are great apps to use. And once you choose which app you want to start using, then go ahead and deposit a small amount of money that you're okay with, because you want to keep it, maybe 50 bucks, 100 bucks, something that you're okay with gambling with at first. And you're going to want to start with investing probably into an index fund, like maybe the NASDAQ, maybe an S&P 500 index fund, and that's just going to track the market. Now, generally, the NASDAQ will go up more than the S&P or the Dow will. So that's why I always prefer to do the NASDAQ over other ones. And so you're going to buy one of these index funds, okay? And a lot of them pay a dividend too, so that'll be nice. And you're just going to track it for maybe a couple of weeks, a couple of months, and you're just going to get a sense of what the market does on a normal basis, okay? Then what you're going to do is you're going to start expanding your portfolio. And when it's your first year or so, you want to invest in the safe companies that you're not going to lose a bunch of money with. So this means generally it's companies with bigger market caps. So maybe something like an Apple, an Amazon, or Facebook, a Google, something like that is going to be safe because the market cap's so big. Most of the time the volatility is really low, so you're not going to lose too much money. And those are really strong companies that you can bet on over the long term, okay? Then what I would recommend doing is, once you have a few companies you like, then maybe, allocate a small percentage of your portfolio towards more, dangerous or more speculative stocks. Because if you want to have 5 or 10% in speculative stocks, then that's okay, because a lot of times those stocks are going to be the ones that can, you can 10x your money or 20x your money. But you want to keep that to a minimum. You want the majority of your portfolio to be in safe stocks, okay? I would also make sure you have at least one stock that is paying you a dividend, because that's something you want to get, you want to get used to what it feels like to receive a dividend every quarter, okay? So that's something good to have in there. Then what you're going to do is start researching more and more companies, and during your first year, I would probably keep it to a max of about maybe 10 stocks. If you're going past 10 stocks and it's your first year, that's probably too much for you to handle, because you need to get used to, researching these companies, reading their financial reports, listening to the conference calls, and really staying up to date with what's happening for each company, okay? Now, once you have, a couple of years of experience, and maybe you have $50,000 or $100,000 in there, then you can go ahead and, expand your portfolio past 10 stocks, okay? But just keep reinvesting the profits you make, stay consistent, and learn how to research companies, okay? Then what you're gonna do is consistently, try to do it every month, deposit some more money in there, and keep that account growing, okay? Don't pull out any money, because that's how the account is gonna shrink. You wanna keep it growing. Okay, then just be patient, watch it grow, and one day you're gonna be very rich.